if you have the pricing engine, if network, and if you have all your stuff dialed in, then we think you're a real good bet as a borrower more or less all the time.
What's up, everybody? My name's Mike Sjogren, here with my co-host
Emmanuel Pani.
We're part of a group of specialized real estate investors you've probably never heard of.
We didn't start with deep pockets or wealthy families, and we don't rely on 401ks, mutual funds, or traditional real estate investing.
In fact, many of us don't even own the properties that fund our freedom. If you ask the money experts out there, they'd say what we do is impossible, yet it's happening every single day.
It's happening through a new niche called short-term rentals.
We are Short-Term Rental Nation, and these are our secrets. What's going on, STR Nation? Welcome back to another episode of the Short-Term Rental Secrets podcast. I'm your host, Mike Sjogren, here with my main man and brother from another mother, Mr. Emmanuel Pani. What's up, E?
My brother, so good to see you. We had all of Tasha's family into town for the wedding, right? And her dad is 84. And one thing that I found so interesting about him, so we played a bunch of new card games. We played like Catan, right? And so the assumption to me in my mind was like, how are we going to teach an 84-year-old how to play Catan? Right? The whole old dogs can learn new tricks kind of thing. Dude, this motherfucker not only learned Catan, but like almost won it, right?
You
And
wiped
then
the
the same day we like taught him two other card games, and he almost one of the other ones too. And it was just like he had so much like enjoyment for like life at 84 that I'm like, dude, I respect it out of him for like, first of all, he came all the way from Angola by himself for the wedding, and he just like, I see some 84-year-old walking around here, especially in South Florida, that there have people helping them do groceries, people helping them get in the car. And it's just like, life really becomes what you'd let it be. And this man at 84 is just there kicking my ass a ton. Also because I didn't strategize well. So I literally got my ass whooped. And it was just like, I found it so funny being like, dude, I don't know. He's still like, goes back to Angola now. He's building he's still like actively building things, and like he has a construction company, so he's negotiating contracts with the government and stuff. And you're just like, bro, you're 84, and he hasn't missed a big beat. So it's just like, I don't know, kind of like an interesting realization when it comes to like.
I bet he enjoys what he does, though.
No, that's what I mean. Yeah, he has created this life that he loves. And like you can see it. That's what I'm saying. Like, you can see it from like how he still has this like, I don't know. He just likes life. He still has a taste for life, So something for me to like.
I don't think I could ever like stop. You know what I mean? Like,
yeah,
and just sit around. Like if
and you know what?
It's just not.
No,
exactly.
Yeah, I agree. But it's funny to see it and witnessing that in a thing that like, somebody's grandparents are 84 and they're like, dude, my grandparents are so old, they're about to die. And then I have Tasha's dad, there's 84, is a fucking machine. And he's still going through life, learning Catan, you know what I mean? Like flying, like he flew by himself from Europe, doesn't speak any English, he got here. He just like the life that you've seen and just like having so much like enjoyment of life and the jokes that he tells. And it's just like, it's just like good vibes, So I'm feeling very full from that perspective. I love being with family. And again, I said this last time, but it's a chance to experience my why, right? It's a chance to experience what we work so hard for. The fact that I can spend weeks with family and just playing cards and, drinking until late and having wine and just, this is why we do it, right? So it's always good to like experience why you work so hard. We're often not active.
I love that.
So that's where I've been at. What about you?
I mean, hotel rentals moving right along. A lot of moving pieces on that, but I'm really excited. Like we're starting to get a lot of the pieces in place. A lot of people involved in that, and it's just really cool. I'm really excited to see what that finished product's gonna look like in a few months. And just put another property under contract for primary residence, which I'm super psyched about. I got the inspection tomorrow. And yeah, man,
I've had buying a primary after buying two hotels. You're like,
It feels like a walk in the park, except the lending, which is interesting that we have our guest today, which I'll introduce here in a
Yeah.
second. But I swear, man,
Yeah.
like traditional financing, I just want to scream sometimes. I'm like, dude,
Yeah.
doesn't somebody in there have a checklist that you like can just give me of stuff that you need? I feel like every
Yeah.
day there's just more stuff. And I'm like, dude,
Yeah.
how is there not a checklist? Like,
Yeah. It's
shouldn't
pretty
there be
simple.
some
It's
master
like an
checklist?
online portal, like the checklist, and then you upload it, check it off, and it's just done. Yeah.
Just
So I
drives me
guess
nuts.
that
But
has to be
anyway,
a walk in the park. So it's easier to buy a 67 room
well,
hotel.
that hotel was no walk in the park, but that was a large commercial deal. I mean, this is a house. So anyway, I'm excited for that, and
Yeah.
keep you guys posted on that. But I'm excited for today's episode. So today we've got Robin Simon on the podcast. He's a partner at Easy Street Capital, and he oversees their DSCR loan platform. He's got a specialty in financing with short-term rentals. They're one of the nation's leaders and forerunners of lending on STRs, pioneering use of alternative qualification methods like AirDNA data, and recently medium-term rentals and co-housing. And they were also a sponsor of STR WealthCon. So appreciate you guys for doing that. So without further ado, Robin, welcome to the show, man. Nice for being here.
Thanks for having me. Excited.
Yeah, absolutely, man. So why don't you give us kind of your background first on and what got you into short-term rentals and with Easy Street? Like, what was your background and how'd you get into that company?
Yeah, sounds good. So I've been working for about a decade. Came out of school. Started really in finance in Deloitte, Ernst and Young, in their accounting, auditing, and structured finance advisory side. I kind of fell into real estate, commercial real estate, especially on the loan side, on the lending side, and bounced around a few places. Traditionally been in commercial real estate, and in the last few years, started shifting over to what's kind of that gray area. Sometimes it's called resi-mercial, where it's residential investment properties, but it's almost also like commercial loans because they're only business purpose, they're only used for investment. A few years ago, short-term rentals really started to mature as an industry, really started to get more popular. Kind of shifted my focus onto that, and providing loans for people still trying to invest in investment properties 1 to 10 units. So anything from kind of like a single family rental, duplex, triplex, small multifamily, and more of that has included the short-term rentals, as instead of a long-term rental. So as we've seen, over the last few years, and I think you've covered this probably many times, as you talk to a lot of people that invest in long-term rentals, they have a portfolio and they try short-term rentals and they say, well, I just started with short-term rentals and now I'm making 2 times as much, 3 times as much as I do on my long-term rentals, and they never go back. So I've kind of jumped in full throttle to this piece of the industry, which I think is really exciting. It's that DSCR loans, or the commercial loans for these investment residential properties. And then last January, I came over to Easy Street to launch the DSCR loan platform. We call it Easy Rent. And those are these DSCR loans up to 10 units, and with a real specialty we have on short-term rentals and BRRRR method investments too. And then of course the Airbnb BRRRR, which is the combination strategy, which we see a lot of as well.
I want to hear more about that. The
Airbnb
Airbnb or whatever. Yeah.
The Airbnb BRRRR. Yeah. So
it sounds like an airline.
No,
Yeah,
from a
so,
product standpoint, like what you guys are offering, because I know we
Yeah.
do that. He does that. I do that. A lot of people do it. So
yeah, for sure. So, one of the reasons that, I came into Easy Street was Easy Street's, we've been around for a while, specializing in, traditional hard money lending, which is, short loans, 6 months, buy property, rehab it, flip it, and, make a quick buck. But we had a lot of investors that started doing the math and saying, well, the same property, I could buy it, rehab it, and then, flip it and make $20,000, or I could keep it myself, rent it out, refinance it, and make $20,000 in cash flow every year. So unfortunately, we didn't have that product, at Easy Street, and we had to say, okay, sorry, we don't have the refinance loan, and send our longtime borrowers down the street to a competitor. So that was one of the reasons I came on, so we could give those refinance DSCR loans to those BRRRR method investors who don't necessarily always want to flip, but they want to refinance and keep. And then a lot of those same guys say, well, why would I, instead of flipping and make $20,000 once, I'm going to rent it out and make $20,000 a year on a long-term lease, but I can make $40,000 a year as a short-term rental. So, it's just the natural evolution. A lot of people want to say, okay, I want to do an STR, and combine the BRRRR method with the STRs, and buy something, refurbish it, renovate it, and then renovate it maybe with a STR twist, and then put it into your portfolio, your well-oiled machine, and you're off to the races. But a lot of traditional lenders and a lot of even DSCR lenders will require long seasoning periods before you can do that refinance. Almost everywhere else, it's not going to allow that Airbnb BRRRR until you have, say, 12 months of ownership and have 12 months of operating history as a short-term rental to get the refinance. But we really believe in STRs. We really believe in a lot of these deals and a lot of our professional short-term rental investor borrowers. So, we were able to offer, when no one else was, the quote unquote Airbnb BRRRR, where we can say, hey, you buy the property, you rehab it for 4 months, you put it on the market, it's a successful short-term rental, you have a booking. Okay, let's do the refinance now. We're not gonna make you wait 12 months to do that. We've seen a lot of people have a lot of success, with that strategy.
Yeah, so that's awesome, because the people that we had on the show last week, so there were Ali and Kyle. That's one of the things that Kyle's kind of spoke about, is the fact that this is what they wanted to do, but the problem was they were running into an issue with the velocity on their money, because they did the BRRRR and then the bank would okay, I need 6 months worth of vacation rental income. So what is something that you can tell us? So obviously, if we had a listener that it's in that business model, what is a good way for you as an investor to kind of get all your ducks lined up to most successfully be able to refi out a property that you did an Airbnb BRRRR on?
Yeah, I mean, I think we like to help investors across the spectrum. So anywhere from kind of first-time investors really starting out, but really our bread and butter is what we call the professional investors of short-term rentals. And if they qualify under that criteria, under our guidelines, then we're willing to go pretty aggressive and max leverage and underwrite.
What's your guideline?
So we define the professional owner of professional investor of STR as someone who has an Airbnb in the market for say they're buying in San Antonio, they have a short-term rental Airbnb that has 12 months in that market, or they have 3 or more nationwide. So maybe they're starting a new market, but they have 3 or more. So the philosophy behind that is we want those professional investors of STRs. So the guys that know what they're doing, they've had a couple properties, they listen to podcasts like this, they go to the conferences, they have their pricing engine dialed in, they do their research, they've had the 12 a.m. phone call with the broken hot tub or toilet, and they know how to deal with it. So we really trust those investors, and we'll be aggressive lending to them quickly and over again. We'll still do the people just starting out. So maybe it's your first one, or you don't quite have experience in that market. We'll just be a little more conservative. But the advice is if you know what you're doing, if you're going to do the rehab piece of it, because that can go wrong pretty quickly. But general advice is kind of just what I just said, which is we want those professional owners, and we want the people that we've been to these conferences and listen to your podcast, and you guys do a great job touching on this over and over again. Is if you have the pricing engine, if you network, and if you have all your stuff dialed in, then we think you're a real good bet as a bar more or less all the time.
Love it. So let's just put a hypothetical together. So let's just say I find a deal in I don't know, another deal in Kissimmee. If I'm looking down there, what are some, like, I guess obviously it'll depend most likely on the deal. Well, let's just say it's another property, a 10-bedroom house for $1 million. What kind of like loan to value and timelines and terms is somebody looking at right now? Because I think the other thing is I want to give people an idea of the landscape of the market of where we are right now. Some
And
people,
where it's going.
they still think that we're a year ago, and that's just not reality. So
Yeah, it's definitely been volatile, but we've seen a lot of stabilization really in 2023. So in the last few months, and we're getting somewhere back to kind of where we were in the options, maybe in the heyday of 2021, but with the rates a little bit higher. But yeah, $1 million property, in Kissimmee, we see deals like that all the time. You're purchasing that, we're going to go up to 80% LTV. So you can put as little as 20% down. And then we can qualify that really using the AirDNA projections. So, that's typically very accurate. We do a lot of research and work with AirDNA, and their stuff is really, really good. We found. So usually you'll be able to cash flow and get that DSCR over 1. And then really I've written a couple articles recently on this, but your rates are really going to depend on 3 big factors. So the LTV, if you're max leverage, that's going to be a little bit higher than if you do a little bit more conservative leverage. Your DSCR, how much is cash flowing, and then your personal credit score. Yeah, that's a deal we do all the time, and we're doing up to only 20% down and pretty aggressive qualifications right now.
Off the top of your head, do you know the difference between the 20% leverage and a more conservative leverage, and like how much more, like what's the line there? Like what makes you
like basis points?
Yeah, a more conservative leverage. Like, are we talking like 30%, 40%? Are we talking 25? What does that look like?
Yeah. So again, the market's still in a place where it's changing a lot, day over day, week over week.
Yeah.
But typically
Now the
lenders,
listeners will hold you to it. Like now the listeners are gonna tell you, I heard you on the fucking podcast and you said it was this much if I put this much down. Or I guess if you want to, you can just to give him shit, but please don't hold him to it.
Got to be careful. But really, DSCR lenders, us included, we tend to look at it in buckets basically. So the 75 to 80 bucket, the 70, 75, and 5% buckets. But lower leverage really will make quite a bit of the difference. So you're probably looking, maybe 37.5 basis points or so each 5% bucket you drop down, because last year the big worry on for lenders was rates just were moving so high, and now it's a little bit of just conservatism on the valuations front. So people just really want to make sure the values there. But even 30% down, which is not much more than 20% down, that's going to probably get you a much better rate. Probably something between 50 and 100 basis points better.
Which can make a big difference in terms of cash flow. Like, what I mean? Like if you're going there.
Yeah, I just analyze the numbers both ways. I'm like, what's my cash and cash return going to look like? And then what do I need to furnish it and reno it and everything else?
Yeah. When you look at, sorry, go ahead.
I was just going to say a great option too for DSCR loans, especially now with rates a little high, is the interest only option. It's a little bit of a misnomer, but a DSCR loan is typically 30 years fixed rate. If they call it interest only, that means that it's going to be interest only payments for the first 10 years of the loan. So it's really intended to refi out of that or sell it out of that within the first 10 years. And you're qualifying your DSCR and your real cash flow both will be on those interest only payments. And that interest only option usually isn't really going to move your rate up that much. It might make your rate up only like 25 basis points higher, and lower your payments because you're not paying any principal.
Mm-hmm. My question that I had to kind of bring us to another avenue was, I'm curious to know what you guys at Easy Street, like when you have your weekly meetings with the team, right? Like what's the vibe like? What are you guys expecting down the pipeline? Was my first question. And the second part of that question is, right now, who are you guys working with? Like, are you still finding newbie investors coming in, or is the overall fear in the marketplace has really shifted that to more of the seasonal professional investors?
Yeah. So I think kind of the vibe here, we're very optimistic, and we're doing a lot of business. Had a really good first quarter. Our pipeline's probably higher than it's ever been. And we're hiring, a lot of new people, a lot of fresh faces, both on the origination side and the operation side, which definitely can be said for any or not, if not all, but a lot of our competitors. And yeah, so we're excited. We're had a great time at the STR Wealth Conference, obviously, and then are hitting up the conference schedule as well. So we're really excited. Rates are coming down a bit, and yeah, the vibe is definitely positive, I would say. In terms of the second part of your question, that was how do you see the market turning out? Was that it?
And who's coming to you guys now?
Yeah. I mean, we're still seeing a diversified mix. We really like to find borrowers, find investors to help through a variety of channels. So whether that's more of the professionals that are at some of these conferences that are we run into maybe through mortgage brokers and specialists, all the way down to the people bigger pockets. We have a big presence on social media. We're doing a lot on. So we like to see both. I think we're still seeing both. I think there's a lot of potential opportunity. A lot of people are forecasting that maybe people got in over their heads in 2021, and there are a lot of people that weren't really committed to it that are gonna get in trouble and throw up their hands. And that's a big opportunity for people that are patient and liquid and professional to step in and get some good deals. But I mean, we're still waiting for the doom and gloom. I mean, AirDNA puts out great data every month that the short-term rental industry keeps churning along very well. The performance of a lot of these DSCR loans continues to be extremely really good. A lot of the deals we were doing, in the past in 2021, with the lower rates, those had really big cash flows. So even if it slows down a little bit, I think I just don't think there's going to be the Airbnb bust or Airbnb apocalypse that maybe some of the loud voices keep forecasting. So we've still seen a steady mix, and we haven't really seen a lot of panic or trouble yet.
I think the problem is a lot of people just overpaid for deals. They didn't understand how to underwrite deals in the last 2 years.
Well, they were just going for I'll always make money, and I always make money, which is what always happens when the market is bullish, right? Like when we're bullish, we're always like, the gravy train will never end, and the gravy train ends, and you're like, oh shit, it happened. And then that's the thing, is just like, if you underwrite it decently well, you can probably handle some of the shifts. But if you don't, that's definitely. Are you guys planning on expanding into this very hot boutique hotel kind of space in terms of lending, or are you guys going to cap your lending to the 10 units as you said before?
Yeah. So, a lot of us, and myself included, has the more commercial background. So it's always a little bit of a temptation to look into that. I think we have our hands full, really, with the goal, which I think is achievable, of kind of being the best DSCR lender, best STR lender, in the country, and that's plenty to keep us really busy. But it's also up to 10 units. We'll do those short-term rentals up to 10 units. So you're talking about an 8, a 9, a 10 unit property that is, each individual unit, booked on Airbnb or booked as short-term rental. I mean, that's a gray area. Is that a boutique hotel? Is it a short-term rental? Is it
Yeah, we'll
something
take it.
premium?
We'll take with the boutique hotel, right? Anything over 5-ish, I would say, can
Yeah.
kind of swing it. Yeah.
So we'll do those. We'll do those today, and then condo tels, which are very interesting. There's one that's newly built here in Austin. That's fully licensed condo building, but each unit is basically intended to be a short-term rental. It has a front desk. It has kind of a lobby area, pool. It's managed by Vacasa. You can use it as a primary residence, but pretty much everyone uses it as short-term rental. And it has
Can they
places.
manage it themselves? Is there something they can manage themselves, or it has to be managed through Vacasa?
It can be. It is individually owned. Each unit can be managed yourself if you want.
Yeah.
But we'll end on those as well. These condotel projects. So that's blurring the line a little bit. Whether you're talking about the multifamily STR, you're talking about the condotel. So we're already right there. And who knows, as we expand the product, I think we'll follow the investors like yourselves.
The one question that I had, I'm always like, to me, it's always about speed too. Like, how quickly can I get a deal over the line from the time we underwrite it and everything? What is a typical closing timeline from the time that you get under contract to being able to close it with you guys?
Yeah, we aim to go, very quickly. The DSCR is sometimes called a no doc loan, but I don't like that term. But it is a very light documentation loan. Just high level, what we shoot for is kind of a 28-day process where you'll fill out an application, you'll fill out a credit authorization, we'll issue a term sheet, within 24 hours, and then as soon as we receive a deposit, we'll order that appraisal. That's typically a 2-week process. So we have a short checklist of documents to get in. That's usually achievable in that 2-week window. And then appraisal comes in, everything looks good. We can, set closing for, within 7 days from there. So that can go faster, for a borrower that has their stuff in order and gets their stuff in quickly. It can go slower for people that take their time, and there's an odd number of people who decide to take European vacations in the middle of closing a loan that can delay things. I don't know why that's so common, but yeah, generally we can close in about a month time frame, but that can certainly be sped up if stuff gets in quickly.
Mike is already just a checklist. Mike is the moment I checklist. Mike is like, okay, I'll work with you guys. That's perfect.
Well, what I was going to ask is to give some tips for somebody that's thinking about doing a DSCR loan, or they're underwriting a deal right now. What should they have kind of at the ready that would help expedite it, that you guys just are going to ask for right out the gate?
Yeah. So it's a pretty straightforward product. We don't ask for a whole ton. If it's a short-term rental, if it's a refinance, for example, or they have 12 months of operating history, that would be great to have. Sometimes like the Airbnb website or other vendors can be tricky downloading all that information, but we can help with that. A lot of our borrowers borrow through an LLC or an entity. So we have a lawyer, on retainer who can help with that and review it and make sure it looks all good. But if you have all that in order, all your documents signed right, the signature authority is good, the certificate of good standing, that's going to depend on state to state. That can cause a little bit of delays. But it's a very light touch process. Property insurance, that if that's in order, that's something that you want to be on top of, especially if you're investing in Florida, because that's caused some headaches in the last few months since the hurricane. But yeah, I mean, we have the checklist, we have the needs list, we follow up, and it's we try to make it easy for people, because one of the things that I think is a little bit of a talking point, but I think it rings true, is that we're a DSCR lender with a focus on short-term rentals, and we've been committed to short-term rentals and focused on short-term rentals for for years, whereas a lot of other lenders, they might, do home loans and all sorts of loans and include DSCR loans, or they might do DSCR loans and not that familiar with short-term rentals. It's a small part of their process. So with that kind of focus on it, we've seen a lot, what happens before. So we've tailored a lot of our stuff to the STR borrower, and versus, trying to fit that, square peg into a round hole. If you're trying to do a short-term rental loan on a, 6-unit property, that's not going to really fit in the loan origination system or the normal checklist or the normal underwriting box. If you're a lender that's, focused on, home loans for normal families living in them, and have your stuff tailored that way.
100%. Before we get into the last question, because we're right about on time, I wanted to first acknowledge you and thank you for coming on here and sharing all this and being a big supporter of the podcast and of STR Wealth Conference and all that good stuff, and just for putting out a product that's going to help more people close more deals and become financially independent. So thank you for doing that. Where can the listeners get in touch with you guys, find out more about Easy Street Capital and everything you guys have going on?
Thank you for having me. We super excited about where the STR industry is going. I like to tell people I think it's kind of in the third, fourth inning of really growing into an institutional asset class, and still one of the rare places for a lot of people to really have a lot of opportunity. But you can find us online. We have a lot of content. We have our applications, all our program information. It's easystreetcap.com. So no full capital, just easystreetcap.com. We post a lot of content, including myself, on social media. So it's Robin Simon, ESC, ROBIN, SIMON, ESC. So, my main platforms are Twitter and Instagram, LinkedIn, and Bigger Pockets. We like to contribute a lot to the discussions over there. We're kind of open communication. You can talk to someone real. You can talk to one of our account executives, our analysts, quickly. If you shoot us a message, we won't put you through a long bureaucratic process. And we're always looking to meet and talk to short-term rental professionals.
Awesome, man. Well, we appreciate you. The last question we ask all of our guests, and I always love asking this from a vendor standpoint because it's a unique perspective, but what would you say is your number one secret to success with short-term rentals?
I think, consistency is, the real important thing. I think, obviously it's been a, very volatile market, in the space. And, sometimes there can be, last year when rates were rising and everything was looking, all over the place and looking a little doubtful. Stick to our, methodology, stick to our programs, stick to our underwriting and how we view the world with the professional investors in short-term rentals, and how we, evaluate the risk and what we offer. And, don't zig, don't zag, don't kind of have the shiny object syndrome in real estate sometimes, where, maybe short-term rental is the hot thing. And, then a lot of lenders that, moved into that, in 2021 have now gone on to the next hot thing. So we like to stay consistent and focused, and, pump out content every day, stay within our, methodology. And I think that's served us very well.
Awesome. Well, Robin, thank you again for coming on, man. Really appreciate you. And for all listeners out there, have an amazing week. We'll talk to you guys soon.
Hey, STR Nation, if you enjoyed this episode, please make sure to hit that subscribe button and leave us a review. And in the comments, let us know what topics you want us to cover on upcoming episodes, and we'll make sure to get that in the books for you. And if you really want to learn how to launch, automate, and scale your short-term rental business, if you want to go deeper, then check out our free masterclass at strsecrets.com.